Coinbase, the largest cryptocurrency exchange in America, has just won a major legal battle. You know Coinbase is involved with a few legal battles in the United States right now, most of which question the legality of Coinbase's business model and if Coinbase is breaking U.S. securities law. Now, founder and CEO of Coinbase, Brian Armstrong himself, has made it clear that Coinbase will not roll over, they will not delist, they will fight for the rights of crypto in the US. Good news. The United States Court of Appeals for the Second Circuit ruled in favor of Coinbase, confirming the secondary sale of crypto on its platform do not violate the Securities Exchange Act, meaning crypto tokens traded on Coinbase do not constitute as trading securities. So, Coinbase has been cleared in this lawsuit. This is a significant victory for the U.S. exchange, as the court's decision affects a nationwide group of people who traded tokens on Coinbase from October 8, 2019 to March 11, 2022. At the heart of this dispute was whether cryptocurrencies traded on Coinbase met the criteria for securities. So understand exactly the lawsuit that Coinbase just won. This was a class action lawsuit against Coinbase alleging unregulated securities sales, where the plaintiffs said that 79 tokens on Coinbase meet the definition of securities, but they were not warned of those risks. And what it ultimately came down to was interpreting Coinbase's user agreement, which evolved over that time. So even though the class action lawsuit really didn't win, they're arguing the ruling as a step forward in holding crypto platforms accountable under securities law, advocating for investor protection in the evolving crypto space, something we can all get behind. But conversely, Coinbase is asserting the decision reinforces its position that secondary crypto sales aren't security transactions. Coinbase's chief legal officer, Paul G., expressed gratitude on X social platform, saying, "We appreciate the Second Circuit Court confirming today what is clear under federal securities law. There's no private liability for the secondary trading of digital assets on exchanges like Coinbase. Why? Because contracts matter." Coinbase's biggest fight against Gary Gensler and the SEC is still ongoing. Doesn't change the fact that Coinbase keeps racking up those wins. And ultimately, this is part of Brian Armstrong and Coinbase's greater goal of helping spur regulatory change to make the US a leader in crypto technology.
The naive view of crypto is that this is some speculative asset that people are trading and they're going to lose their shirts. That's missing the forest through the trees. Fundamentally, crypto is not a financial product. It's a technology that can update all kinds of financial products. It can improve settlement times. It can make it cheaper to send money to your family overseas in another country. It can be a new way for artists to get paid. Cryptocurrency, regardless of what you think about it, it's not going anywhere. It can't be uninvented. Most of the world is embracing this technology now to update their financial system. And what I fear is that we're going to be sitting here in 5 or 10 years, and we're going to come back to crypto and think about it like we did with 5G or semiconductors, and say, wow, now it's a matter of national security that we get it brought back onshore. We need to see what the potential of it is and where it goes. And we need to do that, we need a clear rule book in the United States.
Now, this all doesn't change the fact that decentralized exchanges, DEXs, like Uniswap, continue to eat the lunch of CEXs, take market share away from centralized exchanges, and in fact, Uniswap just hit $2 trillion in lifetime trading volume, rivaling that of major CEXs. The trading volume figure encompasses transactions conducted across various blockchains supporting Uniswap, or Uniswap supporting various blockchains, including Ethereum, Polygon, Optimism, Arbitrum, Celo, BNB Chain, Base, Blast, and AVAX Network. As you recall, Uniswap launched in November of 2018. It initially took 42 months to surpass that 1 trillion trading volume milestone back in May of 2022. However, it managed to surpass the 2nd trillion mark in less than 24 months, even in the face of increasing competition within the DEX space. There's just so much momentum behind Uniswap and other DEXs. I mean, for instance, Uniswap, which is the largest, amassed a staggering 21.6 billion in volume over the past week alone. PancakeSwap, a derivative of Uniswap, followed in second place with 9.6 billion in trading volume, and other notable DEXs such as Curve, Balancer, Trader Joe round out the top 5 with volumes ranging from 800 million to 1.8 billion. Listen, centralized exchanges have their place, but I find myself using decentralized exchanges more and more. Particularly, they continue to add functionality, they continue to make it more usable, more user-friendly. It's nice to see so many different sectors of crypto exploding with growth. It's good for the user. So, with all that being said, Bitcoin is taking a breather right now, but I believe Bitcoin goes much higher. The question is, how high can it go? Anthony Scaramucci of Skybridge Capital just updated his thoughts. I wholeheartedly agree with what he says at the end about the halving. Listen.
Bitcoin's back. Why? What are all the reasons you think?
Well, I mean, I think the ETF was a big reason. I think the regulatory hurdle where the United States government is now allowing a QSIP to be attached to Bitcoin is a big reason. And I think you know Wall Street as well as anybody. When Wall Street gets a product like this, it's like a selling machine, and it's generating lots of demand for the product. And I think we're surprised that there's over $10 billion in the first quarter of new flows for something like Bitcoin.
Why? Why are you surprised?
Well, it took a year for GLD, the gold ETF, to get to $10 billion. And so this did it in 25% of the time. And, you know, not to bore everybody, but Bitcoin's, the network spits out about 900 coins a day. That's going to get cut in half probably April 20th or so. And so you're going down to 450 coins, and you probably have 2,000 to 3,000 coins of base demand at a time when the supply is going to get cut. So they said earlier that Bitcoin, the price of Bitcoin, the ETF was priced in. They're now saying that the halving is priced in. I don't believe that either. I think Bitcoin has a lot more to go here.
So, what's his price prediction? How high can Bitcoin go? Hey, this is a continued conversation. Make sure you subscribe for daily content, and make sure you get your tickets to the roast of Altcoin Daily, Thursday, April 11th, this week, 6 p.m. to 10 p.m., Santa Monica at the Expert Dojo. This is a roast, so there will be comedians roasting us, and, you know, this will be full of laughs, but this is also kind of like an Altcoin Daily meetup. Come and say hi. Ticket information is below. I hope to see you there. And let me know, do you agree with Scaramucci's price prediction here?
Do you have in your mind a target level as people still try and throw those out, what you think is reasonable?
So I've been consistent with this, and I basically say that the halving's going to come on or about April 20th. Typically what's happened over the 18 months since the halving, you get a 4x move in Bitcoin. Let's be a little bit more conservative than that. I've been saying that it's about $170,000 for this cycle. But Bitcoin is a cyclical product, in my opinion. Waves of people come into it, the demand is there, and then it goes through, you know, pulls and drags, if you will. So I think it gets to 170,000 by the end of the cycle. We also like Solana, fully disclosed. We have smaller positions like Algorand and smaller positions like Avalanche. We're looking at some other tokens. But Bitcoin's the big kahuna. The U.S. dollar's lost about 22% of its value since January of 2020. Bitcoin's gone up 8 to 1. Now you can say, okay, well, Anthony, you're dot plotting, you're picking a high dot for Bitcoin. Maybe Bitcoin drops 50% due to its volatility. But I think the arc of it is an inflation hedge. It doesn't necessarily mean that it's a short-term inflation hedge, but if you own Bitcoin, anybody that's owned Bitcoin in a rolling 4-year period of time, they've actually done well, Scott. They've never lost money if they're able to hold on to it for periods like that.